Good morning, all. It's Jared here from the Alpha Capital Group. Just popping through for a weekly recap of the volatility of the price action and I suppose some of the big talking points that's occurred this week, particularly off the back of the RBA, Bank of Canada, and the ECB as well, with factoring in the data. Now, of course, obviously with the circumstances that's developing in the UK at the minute, regarding the Queen obviously passing away, we are expecting a little bit of kind of a change in operating next week. We are meant to have Bank of England next Wednesday, and there is early discussions on whether that will actually be postponed till after her funeral arrangements have been completed. Of course, trading hours, there's been rumors that some of the other locations, out of sympathy, will be changing their trading hours, so the likes of late openings and early closes and so on. So we'll be looking at that next week in detail when we get more information at hand, but it's no harm to make people aware of this into obviously the weekend, and of course the mourning period that will begin off the back of that. So moving on, I suppose, to the price action this week, we've seen a multitude of central bank meetings across the globe. We've had Australia, which raised 50 basis points, continuing their hawkish approach. We've had the Bank of Canada following that up on Wednesday with a 75 basis point increase. And we've had the ECB yesterday matching the Bank of Canada and also raising by 75 basis points. Now, again, in addition to that, we've had a wide number of central bank speakers, both in the US and in Europe, and in the broader, I suppose, G7 currencies as well. So we've had Kana in Japan, we've had Rogers, we've had Powell speaking on Wednesday, we've had Lagarde. So we've had a wide number of members speaking on different days this week. Now, over the night, so obviously capitalizing from our initial video on Wednesday, overnight we had quite some interesting data out of China, as the Chinese CPIs came in a decent bit under expectations, 2.5 v 2.8, and the CPI index was negative 0.1, which actually shows that inflation was actually coming down on the monthly, and on the year-on-year, the PPI was still well under 3% at 2.3%. So that's given a massive swing in the markets overnight, because as we know, yes, the US dollar is the global reserve currency and the US markets has the primarily traded volume, but also China is the global provider for products globally across the board. And of course, as their data is good, that tends to have a knock-on effect for global markets. And we've seen that very, very visibly this morning as well. Now, of course, we have Lagarde speaking later on at 10:30 a.m. UK time, so just over 45 minutes away. And we do have a number of Canadian dollar prints and other interesting pieces of information coming out today in the afternoon in the Canadian economy. So I suppose it'll just be all eyes really on the price action. We've had a very, very busy 48 hours, both up and down in terms of the volatility, in terms of the price action, which we'll be looking at now in a moment. So I suppose it's just been able to reconcile and understand that as well. Now, I suppose moving across to the actual visible price action, the dollar has had that massive tick up. We talked about it on Wednesday, we talked about it on Monday, massive tick up. But that Canadian, or that Chinese, should I say, CPI figure has definitely brought in some buoyancy and positivity into the markets into this weekend's close. And we have seen that DXY dollar currency index sell off. And as a result, with the dollar selling off, the euro dollar, the cable, dollar CAD has all seen some significant moves overnight. You only have to look at the dollar yen, which has pared back almost 200 points of movements in the early markets this morning. So we just have to kind of be aware of that as well. These fundamental events will move markets. So I know, traditionally speaking, with the prop firms, everyone tends to trade the technicals and the price action. But in these changing circumstances, in these changing climates, it definitely becomes important to even just be aware of the fundamentals and knowing how they affect the markets. So at least that way, then, if you are positioned accordingly, you can protect yourself and minimize the exposure. And of course, make sure that you're not in breach of any rules or any regulations. And that goes for every prop firm. It's not just ourselves, Alpha Capital Group, the likes of any other kind of mainstream prop firm would also and should be encouraging the same. And if they're not, I would question their ethics. So moving across, looking at the DXY, as I said, we've seen those fairly significant pullbacks. We're seeing those moves in the euro dollar as well. So the euro dollar, this area here around parity is what I was kind of looking at this week from a statistical standpoint. And of course, we've seen that very, very swift break through that parity level again after that initial rejection yesterday. And the price action is turning higher at this moment in time. So we are above 101 at the moment in time, that 101 handle, and we are continuing to grind higher. So it's likely just to see where does this dollar pullback or this dollar selling bias actually end. Does it sustain itself through the course of today's session, or does it become more elongated into the middle of next week? Only time will tell, but of course it's important to be aware of these correlations within these markets, understand them. And of course, if you don't understand the correlations of how these different assets react off each other, we're all the time talking about it in a Discord group, and feel free to ask questions on that as well. Similarly enough with the cable's broken back above this lower high scenario here at 116 off the back of that weaker dollar. And we really are seeing that kind of little bit of a churn, a little bit of a recovery in the cable from those lows around 114.50, 115. So at this moment in time, bulls are very much in control as the pullback edges and grinds itself higher. Now we do have a liquidity area here, a price action level here around 116.50 that I'm kind of watching. That was a shorter term level, so it could be questioned to see whether the price action actually closes above that today. If it does, well then the likelihood is we're going to see continued, as I said, buoyancy into next week off the back of this dollar pullback. Gold as well. So I have, personally speaking, from my own standpoint, I have taken a long position on gold. I did get in here around about the 1695, 1700 level. I am looking to run that through into next week. We are seeing some short-term highs around that 1725, 1730 level at this moment in time. But when you look at the broader perspective, we are seeing that nice little bottom being created here at 1700. And of course, that weaker dollar will give that little bit more support to the gold prices to see if there is that upside recovery from that significant selling that we saw kind of from the mid-August at 1800 or so. So watching that closely next week as well. Moving across then into the indices, we're seeing that fairly significant pullback. So S&Ps, NASDAQ and Dow Jones, if we were to look at all three collectively, we would see a very, very similar scenario, similar price action structure developing. And of course, seeing how the markets are actually taking that in instead. So the CPI figures broadly, markets are taking it well, and of course we're seeing those indices as a result pop higher. So with the weaker dollar, we get that stronger reversion into risk assets. It's constant, the battle between risk on, which is your riskier asset classes like your cryptos and your indices and your individual stock markets, your risk off, your safe haven plays with the likes of the dollar as well, and just understanding the inversions and how they react off each other. So as I said, at this moment in time, stock markets are rallying quite significantly. We're still getting that short-term move higher from Wednesday evening into Thursday. So we had that move. Then, of course, with the ECB, there was that little bit of a sell-off initially. But of course, markets have rallied quite significantly from yesterday evening, last night, and of course through the Asia session. This morning as well, as we kind of look into the London Open. Now, London markets are still technically open today, so we haven't heard any revisions in terms of opening times or closures or anything like that. So for the moment in time, it is business as usual. And of course, then kind of moving across to the FTSE, looking at the London price action. And of course, we've seen that massive reaction off the FTSE around that 71, 75, 7200 level. On the daily time frame, there was that smart money play, smart money rejection. We're seeing that recovery back into 7,400 at the minute. We're just shy of that, but there is potential to work this price action even higher, and from that perspective I'll be looking at kind of 74, 75s to see if there's any sort of meaningful recovery. So since the news that broke yesterday in the UK, and obviously the CPIs and of course the ECB, markets have done progressively well, and of course it's just waiting to see, does that become more sustained? Do we see that continued upside move? If we can, then we're probably going to be looking at kind of 41s, 4150s S&Ps. You're going to see that kind of buoyancy continue, upside price action continue, and again risk orientation dominating over risk safety in these markets. So that's kind of where we are at the minute. Of course, looking at the DAX and the Euro stocks, DAX and Euro stocks in Europe aren't immune to this recovery. We have seen a very, very swift recovery in the Euro stocks back above this short-term high that we kind of talked about earlier in the week at 35.30. 35.25, and we are heading back into this 36 handle up here. And similarly, again on the DAX, we've broken through kind of the consolidation, the choppy back and forth this week on the DAX between the 12.6 and 13 handle. So 400-point range all week pretty much. And we've seen that markets rally straight through and looking to kind of churn higher. So as long as that sentiment is still continuing to play out, then the market should continue to recover. So it's just important to be aware of that. Now, of course, I think if you were to look at the broader perspectives to put a bit of context on it, we are seeing that kind of clear cyclical change in price action. We've seen that recovery, we've seen that upswing. Now I suppose it's a case of, can we get one more kind of relief rally back into this level? At this moment in time, it doesn't look likely, but of course watching the price action accordingly into next week with the changing circumstances, and of course being able to apply clear logic on the back of that. So that's pretty much it for this week, everyone. Between Monday, Wednesday and Friday, we will be back on Monday for an update. Now there is bank holidays in Asia and China over the weekend, so I suspect it could be a quiet Asia session on Sunday night into Monday morning. So let's just wait and see how that one plays out. And of course, let's just wait, see how the markets close this week, and of course prep ourselves for next week as well. We are meant to have Bank of England. We are meant to have a range of other data points, like I think the CPIs is coming out next week in the UK. I think it's on Wednesday. So it's going to be another busy week off the back of that. And of course, gearing up and getting ready for the Fed on September 21st, which is going to be the next interest rate meeting in the US of A. All right. Have a great weekend, everyone. Trade safe, and see you all next week.